Started in 1989, Vandana Luthra and her husband Mukesh Luthra founded Vandana Luthra's Curls and Curves India Limited, which finally came to be known as VLCC Health Care, a company which began offering beauty parlor, slimming and wellness services to Indian women at a time when organized beauty and wellness market was still very nascent. But today VLCC Healthcare is a 700 crore rupee business, not only offering beauty services but also manufacturing products for skin, body and hair wellness. The company is now present in geographies like Malaysia, Middle East and has a presence in 85 cities across India. The company has seen two rounds of funding, the first when CLSA Private Equity bought 13.65% in the company for an undisclosed sum. Series B was then funded by Everstone Capital, who purchased 16%. Recent news reports state that Everstone could exit the company selling its 16% stake for 400 crores, which would imply VLCC's valuation to be 2,200 crore rupees. VCCircle caught up with the company's managing director Sandeep Ahuja to talk about the company's acquisition plans and future targets that the company plans to achieve.
Mr. Ahuja, thank you for talking to VCCircle TV. I want to talk about the company today in the market. You have mentioned as priorities brand building, category diversification and marketing as some of the key focus areas that the company must look at right now. What are you doing right now in this field?
Well, as a company that's been in high growth mode in a sector that's expanding very fast, in order to maintain our leadership position, it is essential to, make conscious and continuous investments in the focus areas that you just enumerated, and that's what we plan to do. And the reason for that, as I explained to you, is because it's a question of wanting to stay ahead of the curve. Also, the fact is that with now operations being in across 10 countries all over Asia, and some are relatively new markets for us in comparison to some of the other markets. For example, we've just acquired a company in Malaysia which is currently not the #1 company. Okay. So one of the focus areas is that as an organization we're very used to, in terms of our own psyche, to be the lead player in whichever market we operate in. So a lot of focus is now happening to be able to ensure that we leapfrog to #1 position as quickly as possible. So those are the kind of things that currently occupy us.
So in terms of diversification of offering, where do you think the company has to now focus on?
Well, if you look at legacy, or if you look at the way we've sort of evolved, as a company, what we've done is that every stage of evolution has been defined by the fact that we will stay close to the knitting as far as possible when it comes to the areas in which we operate. So if you see, when we started 20 years ago, we were in the sort of fitness and beauty and slimming space, and natural progression was to get into the beauty space using the same infrastructure. Yeah. And then as we grew, we discovered, we foresaw rather that one of our bottlenecks to growth or to a high pace of consistent growth would be manpower, and that's how we got into the education and training business in the beauty and nutrition space. Whereas the temptation at that time could easily have been, having set up the beauty and nutrition training infrastructure, use the same infrastructure to do beauty training for any other vocational kind of opportunity, which we didn't, because we were very sure that this is our core and we would want to stick to it. Then having grown to a size beyond a certain level where economies of scale could kick in, we decided to take in the manufacturing of the consumables for the skincare, hair care and body care treatments that we were doing at our VLCC centers. Both because of the need to ensure standardization, as also to ensure protection of IPR for the formulations that we were using as consumables, and that's how we got into the beauty products business, which is essentially, from a services company, we became more diversified services and products company, but very much in the wellness domain. Having said that, even going forward, whether it is acquisitions, whether it is, as you put it, diversifications, whatever we do, we will be very sure that they will be they will be in a manner of speaking contiguous steps, and not something which is entirely divergent to what we're doing.
So then the acquisitions that you made, now you made two acquisitions, one the grooming company in the Gulf and the other one is Wine, which is in Malaysia. Now these are two acquisitions you made?
Well, let me correct you, the grooming company didn't exactly come our way.
Okay.
With that was something we did not sort of reach its logical conclusion. But you're right about Wine in Malaysia. There are...
Other than giving you a foothold in another geographical region, what has Wine added in terms of value?
Well, you know, it's a two-way street when it comes to value. What we've done with Wine is add value to what they were doing in that marketplace, taking our systems and processes. And what it's done for us is give us an opportunity into a new market at a cost that is very, very attractive. And it's in a business which is exactly the same as ours. So integration to that extent has never been a challenge, and that's one of the reasons that attracted us to that company. The other reason that we were interested in that company is because there are certain systems and processes that are unique to us. Similarly, that company had systems and processes that are unique to them, which we could and we will do very well to adapt within our network, be it in India or the Middle East, for example.
Are there such targets that you would want to look at? Is there something that can add value right now? Are you eyeing something about?
Well, it's been reported. It's not exactly a secret that we are looking at similar opportunities. But those opportunities will be followed up on only if we see advantages at both the level of the ownership of that business and how well they look at what we want to do, and where is the meeting of the minds on that account. And the other is whether we really want to get into that market or not. If you were to ask us if there are any target sort of markets, the fact is that there are opportunities galore, whether it is in the Middle East where we currently operate or Southeast Asia where we also have an operation going. So to that extent, we haven't made up our minds as to this is what we will do, this is not what we will do. We will look at each opportunity in its own context.
But what would be a suitable fit for VLCC today in terms of a add value acquisition?
Well, one is will
it be a category? Will it be category specific?
No, see, like I said, we're in the wellness domain. So anything within the wellness domain interests us, because one of our ambitions is to occupy as large a space as possible within the wellness domain. So if it is a company that adds value in terms of meeting that goal, that is it doing something that we are interested in, is it within the wellness domain to start with. The other is that what is the accretive value that comes with that acquisition, be it a new market, and a new market that we're interested in, that we know we can help scale up. We would not invest in a company where we don't think we can add value. So that leaves out the biggest player in a market and so on, because there again the valuations are not as attractive as we would, because we have confidence in our sort of bandwidth, we have confidence in our systems and processes, that even if you take a modest sized company in a new market, we'll be able to build it up very, very quickly to a worthwhile size. And we've done that in the Middle East, where we started from scratch barely 6 years ago, and if you were to look at our brand equity, our brand presence, our physical infrastructure presence in those markets is just about as visible as it is in India, which has taken us about 20 years.
So PwC estimates the beauty and wellness market to touch somewhere around 96,000 crores by 2014. Now you got about 300 stores across the board. How much does that make up of market share?
What the FICCI PwC report says about the market is the overall wellness domain, which has several segments and sub-segments, and be it services or be it products, and then within services and products there's also a lot of diversity. So, and we don't operate in all those sectors.
Okay.
But in the sectors that we do operate in, be it the let's say the swimming services, we obviously have the dominant share of the market.
So what would be the size of the universe that VLCC is competing in?
Well, you know, willy-nilly VLCC competes in the entire space because of linkages. But yeah, if you were to look at the slimming market, like I said, we would have the dominant space. Now it's anybody's. You know, this is a debatable subject as to what is the size of the slimming market, for the simple reason that a large part of the market resides in the unorganized sector. But suffice it be to say that we have a dominant share in that. When it comes to the beauty products side of the market, the fact is that the beauty products market is also very fragmented in terms of verticals. So if you were to look at separate verticals within the products market or the FMCG side of the wellness domain, then in the body shaping, and it's nobody's guess, but nobody's that we are the dominant players in that.
Do you have a projected expansion growth or a project to expand the business? 300 centers now. By 2015, how much would you want to expand those outlets by?
Well, we're looking to we're looking at expansion at two levels.
Okay.
One is geographic expansion in terms of getting into newer territories that we're currently not present in. So which would be beyond, let's say, India or the Middle East. In India, we're already present across 85 cities. So you know, going beyond 85 cities is something that we don't see happening at the kind of pace that we were used to. So to that extent, the growth will happen out of sheer penetration. We see opportunities exist in the markets that we are currently operating in within India. We see opportunities in contiguous markets outside India. For example, you know, we're present across the GCC with the exception of Saudi Arabia. Well, that's our next territory. Saudi Arabia is the biggest market in the GCC for both services and products. In fact, we just launched our products there last month. We would be looking at starting our VLCC centers by the last quarter of this fiscal. There is Kuwait.
So these will be in-house operations, as in you will provide the services and products there, or will you have a partner for Saudi?
No, the VLCC in most markets operates on its, well, in all markets operates on its own. Even in the Indian context, if we were to see the VLCC centers, they are all company owned, with the exception of about 35 odd franchisees. The others are all VLCC, are all company owned, and growth is also being looked at from that perspective, because franchising is a value that we've yet to unlock.
Report has it that VLCC is looking at currently finishing this financial year at 700 crores of revenue and at an operating profit of 100 crores. Can you give us some clarity on where this stands?
Current financial year as in FY14?
Yes.
I think you're a year behind, is all I can say.
Alright. So you should finish this financial year by 700 crores.
You're a year behind. We've crossed that milestone already.
Do you have a projection as to how much you want to grow by?
Well, we want to, without sounding very ambitious, but the fact is that the market is growing at the pace that it is, we wouldn't be surprised if we double our business in the next 5 years.
Does the company have reserve funds to get all this done in terms of entering new geographical areas or product diversification? Does the company have enough of reserve funds?
Well, you know, as a company, the kind of business that we're in, we have very, very healthy cash flows. On the services side of our business, the fact of the matter remains that people come to us and pay for a service in advance, which is delivered over a period of time. So that's the construct of the business. So therefore, and that's how we've grown in the past also, is mostly through internal accruals. Private equity investment has been taken on account of two requirements. One is growth beyond the internal accruals level. So, for example, when we went into international markets, which required large amounts of cash, we took in private equity investment, which was as far back as 2004. This second round of investment, which happened in 2007, was more in the nature of a strategic tie-up, which helped us get access and scale up to the modern trade and scale up our products business. So growth going forward will come as a combination of internal accruals and debt.
Okay. That was going to be my next point, because from what we've seen from the VCCircle research, your debt equity ratio is pretty well maintained. So
it's quite healthy. So
would you look at debt financing rather than, say, a stake sale, which many media reports have?
The fact of the matter remains that for any company in a high growth mode, there are several avenues to access funds. It depends on the requirement at that point in time. If there is, I told you, internal accruals are taking care of our normal sort of 25 to 30% growth plan that in the CAGR that we've established so far in the last 5 years. We hope to continue to do so in the next 3-4 years. So to that extent, the funding is all tied up.
Okay.
If there are big ticket investments that require to be made depending on the opportunities available to us, then for any company, not just VLCC, for any company, private equity is also a route.
Okay. All right. One question that I wanted to ask is the talk of going IPO. Now, there's been speculation that VLCC was targeting an IPO, say, in 2009, but that didn't happen because of the markets at that point in time. Now they're saying it'll happen probably 2 years from now. What is the thought process behind going IPO?
Well, again, in fact, that's the third option that a company looks for when wants to look at growth capital, and that's IPO. So it depends on the situation at that point in time. So I would not be anything that I say now, or what I say now and you interpret, would be in the nature of speculation.
Yeah.
As a company, we are always looking at and exploring all opportunities to fund growth, and IPO is one of those opportunities.
Okay.
So I would not be able to give you any definitive response at this point in time.
So you all don't even have a timeline set for something?
Well, every company has a growth path.
Okay.
And in that growth path, with private equity investments, and IPO is always on the cards.
Okay.
But as to the timings, we just have to wait and see.